Now, crude oil prices experienced a significant decline, falling below $60 a barrel briefly. This was following OPEC Plus's announcement to increase production by 411,000 barrels per day starting in June. This move comes after a similar increase in May and has raised concerns about a potential oversupply in the market. Crude oil prices have bounced back above $60 today, and the decision to boost its output is partly driven by Saudi Arabia's efforts to enforce better compliance on quotas by Iraq and Kazakhstan. Analysts suggest that the increase in production is a response to overproduction by these countries and may also align with geopolitical interests. In addition to the supply side factors, global demand for oil remains fragile. China's manufacturing sector has shown signs of contraction. Export orders have also dropped to their weakest level since 2012, excluding pandemic periods, highlighting the impact of ongoing trade tensions. Investor sentiment has been further dampened by deteriorating US-China relations. The US administration's fresh round of tariffs has reignited fears of a broader economic slowdown, while China's cautious response has added to market uncertainty. With the world's two largest oil consumer at odds over this, traders are preparing for prolonged demand weakness as well. The combination of increased supply and weak demand has led analysts to revise their oil price forecasts downward. Barclays has lowered its 2025 Brent crude estimates by $4 to $66 per barrel and its 2026 forecast by $2 to $60 a barrel. The bank attributes this shift to strong market fundamentals and external influences rather than internal overproduction. And for more on this, we are being joined by Mr. Sandeep Bagla, CEO of Trust Mutual Fund, who is joining us live from Mumbai. Thank you so much for joining us on World Business Watch.
Thank you for having me on the show.
Now, with crude falling below $60, do you see this as a structural correction or a short-term oversupply blip?
It's very difficult to say what is structural, especially in times like these, which are so volatile. But I think for the next few months, we are likely to see a correction in crude prices, which could take it significantly lower from current levels also. So I don't see any any significant uptick in crude prices. I think crude will tend to trend lower in the next few weeks and next few months. I don't think it is structural because that would mean over a long period of time crude will not be able to come up. But I think for all practical purposes, for all business purposes, I think for the next few months, it's safe to assume that crude will trend only lower from here.
Right, and could this price dip spark volatility in commodity-linked stocks? Airline stocks went up immediately. What other sectors are affected or could be affected?
You see, I think it will be definitely a huge positive and beneficial to general industries in India because we are fairly crude dependent on import side. So benefits will accrue on the forex side where our forex requirements will go down. On the current account deficit, where our current account deficit will reduce, it will give far more leeway to the government. But it's quite possible that for the consumer, it might not be an immediate benefit because the crude prices at the pump level may not come down. But definitely some industries will stand to gain. Automobiles should gain because it's a complementary good. So automobile should gain, FMCG should gain, airline should gain. It should benefit India in general, tires, carbon black, all these industries should immediately gain from crude prices coming down.
Right, and in fact, I was just going to come to this as well, and just for better understanding here, how might a sub-$60 oil scenario impact inflation expectations and bond yields in India, especially ahead of RBI's next policy meet?
See, I think it is going to have some long-term implications. Inflation expectations could come down by 15 to 20 basis points over the medium term. If the government decides to reduce consumer level prices, even if consumer level prices don't go down, inflation expectations will come down moderately because of the other benefits that will accrue to the economy. I think the RBI's policy path is very, very clear. Given the uncertainties and the slowness in growth, I think they have decided that they will embark on a path of reduced rates and increased liquidity. For the increase in liquidity, they are doing multiple things like swaps and OMO purchases of bonds, which has turned the entire sector deficit, the liquidity deficit, into a liquidity surplus, and which is bringing down, I guess, bank deposit rates and rates in the economy. And on the fiscal side, it will give a lot of room, and inflation will come down. And there's a good possibility that interest rates may remain low for some more time in India.
Right, and just to expand on that, talking of long-term impact as well, do you expect the Indian crude procurement strategies to shift meaningfully if this price trend does persist?
Really, I think it's beyond my paycheck to speculate on that. But I don't see any reason to for them to shift any arrangements, and I'm sure the arrangements are long term. And I think crude will come down, and I mean, one can expect only minor modifications in the strategic procurement strategy. But I think the economy stands to gain in a very meaningful way. The problem is that it might get offset because of the global uncertainties, and the weak demand may persist. So you might not perceive it in the at the index level, but certain industries and certain sectors will definitely gain from it.
All right, Mr. Bagla, thank you so much for joining us on World Business Watch with your insights on this.
Thank you, Him. Thank you so much.
For latest news, download the WION app and subscribe to our YouTube channel.